Boom. Wow. Holy crap. You guys, what a reversal intraday. Hopefully you caught it. Sorry, I'm looking off to the screen. Um, what's up, guys? Just give everybody just a little bit. I just sent it out to the servers. Let me check our Twitter, make sure that it's going. But yeah, man, what a start to the week. I love this. I love it, love it, love it, love it, love it. Guys, I got some crazy trades for you today. I am in a trade, but it's kind of small now. I just set like a little trailing stuff. So hopefully we're good to go. I don't know if we're gonna have anybody joining us today, but let's go ahead and start this now. But anyways, if you're new to here, new to the channel, new to the stream, welcome. What we try to do every Monday is really just kind of like take a look at the market from a business perspective. We're gonna go over a couple of some prior headlines, things like that, what we need to look out for this coming week, and what was interesting last week. I got some data points to show you, but overall, if you're trading or if you're new to trading, trying to make this like an actual income stream and actually do well, this is absolutely kind of what you have to do, right? We've been talking about a lot of trades over the last week or so, a couple weeks, maybe months. That I will touch on. I know a handful of these are going. I got some more for you today. And I got I'm gonna give you one today later on. That's actually gonna probably be like my number one pick for all of next year. And I feel like if I wait too long, it might be too late. So I'm gonna go ahead and send it. But I think I think the market's already seen it. So without further ado, let's go ahead and get started. Apologies for this is the accurate picture now. But anyways, and November to remember. So today is the first day of December. We are, to me, we are like in the heat of what I would say is the Santa Claus rally, if you will. Although a lot of people would say, hey, Santa Claus rally doesn't actually start until Christmas. I'm gonna I'm gonna tell you guys that is not how I roll. Right? If you're coming in around that time, I think you're late. Right? Honestly, the Santa Claus rally, we talked about it last week. It's just by the time everybody's talking about it, you probably missed the boat. But okay, so really quick, just a handful of recaps from last week. We had a ton of Fed speeches. We got some pretty important data too. So we will touch on a lot of that. We got a big number of GDP last week, so I do want to highlight that just a little bit. But for the recaps, we did have. I didn't write this down. We do have a little bit of rebalancing. Obviously, Uber got put into the S&P 500. Builders and another company also. So just a heads up, we might have some more rotation coming on later on, but overall, it's an event if you can anticipate it. We did catch some Uber upside calls, but they were just kind of okay. I'm not going to press that bet right now, though. So I would say that like once that move is done, it's more or less done. So I'd be careful chasing things like that. But in terms of the Fed speakers, it was more that messaging campaign that we were looking at, right? So we had Fed Waller saying that he sees that rates should stay basically steady as they are. FF here on my recap, Fed funds, the Fed funds rate, which I do have a slide on, is actually, so the market is pricing in right now the next rate hike to come in June or July, or rate cut. I'm sorry, I've been talking rate hikes for so long, but yeah, and NFP Friday, yeah, this is the biggest day of the month, and I'll just go over slightly, how to trade that. I will say it's not an active day trade or trading day, if you will. Not typically. They can be big movers, but the day itself, Friday itself, is traded just like any other day. It's how the market accepts that price action next week that's actually really important. Atlanta's Fed Bostic, he's convinced that inflation is on a downward path, so that's good. Jamie Dimon came out, had a couple things like lower earning Americans should be upset about the economy. That might be true. I think if you're kind of like mid class, it's still tough out there for sure. And Powell came out on Friday with his speech. I thought we might be at peak Powell, a while ago, but we are absolutely not. he came out and did kind of like, he wasn't hawkish and he wasn't dovish at the same time. He kind of contradicted himself, but he'd say it's premature to think that we're at the like destination in terms of rates, right? Terminal rate, if you will. And he's not sure that we're restricted enough in terms of fiscal policy. Inflation is moving in the right direction, but he can't say, right? Like, and we talked about this last week. He just can't say. That'd be wild if he actually said something. In the meantime, what I don't have written down here that I do want to put on your radars is a lot of this, bond auction stuff. So we talked about it here and there last week, the week before, the last few weeks, right? The Fed says, or the messaging is that we're going to be issuing less bonds, right? And we have been flooding the bond market with liquidity. And if there's not, and the worry is if there's not enough buyers, well, then the rates have to, the rates really have to go up in order to entice buyers. But the thing is that they can't really slow the pace of purchases right now because it's like they have so much interest to pay on the existing bonds and T-bills that they've already issued. So it's a funky spot. If we're going to be good bulls, we need to know what the bears' logic is going to be. And I'm just going to tell you this right now. The biggest bear case is going to come around this T-bills, right? T-bills and the bonds, right? So the bonds have been going out at like 5+%. That costs the government a ton to pay that interest every month, right? And because of that, they've had to issue more and more bonds to keep up with those interest payments. So if you think about it this way, it's like, if you're younger or you're new to, let's say, credit cards, right? It's almost like opening another credit card to pay for your old credit card balance. And that in itself is what we're talking about. And, I'm a bull, don't get me wrong, but that's a really bad kind of scenario. And it is what we're in. So that is the crux of the issue in terms of like staying a bull, but it's also something we want to be really mindful of if we're going to be pressing longer term bets. Or things like that, just to know what the bear case is out there. But it's a pretty strong bear case. It is this current situation that's happening. But at the same time, there's parts of the market that were still priced for recession. And I think, the gist of this right now is that, look, we're probably going to have a soft landing. And what does that look like? Who knows? But it doesn't look like the market being priced for recession. And that is really what's going on. So here's a recap of the actual data points. We actually got some new home sales and building permits coming in. Prior building permits, this was interesting, down 4.5%. Consensus was 1.1. Again, if you're new to this and you're looking at these kind of data points, what's important is not what the actual number comes in against prior. It's what the actual number comes in against the consensus, right? So if you have a huge disparity or difference between the actual number and the consensus number or forecast number, that's what's going to move market. Yes, this right here was significantly different than the prior, but it wasn't a huge change from the real consensus, if that makes sense. Same thing with home sales. But just to note, they're going up. So building permits, more like commercial stuff, that they're building crazy, right? And people are still buying homes. So it is what it is, right? Here's the home housing price index. So like if there was a bear case around the housing sector, the numbers don't really show it that much. So I just think, it's still a thing. We want to be aware of it, but we're not seeing that, prices coming down. This is all about the supply situation. The prices of homes aren't coming down yet. So here's the big number last week: GDP growth rate quarter over quarter. And remember, these are preliminary numbers. So this is the second estimate of Q3 GDP that we get, and we get 3, right? So this is the second one. The next one is going to be the final. The prior look or forecast was 2.1. The consensus was at 5. It came in at 5.2. And to me, when I saw that, I was like, whoa, that's really high. Because remember, we want to have lower than average growth rate to keep to keep inflation down, right? If we have a lower than average growth rate, then people probably aren't spending as much, and that's really what that's all about. But it looks like it's going higher. The thing about where we are in the market is that with higher growth, with higher GDP, come higher profits, and this is the biggest thing right here that moved the market. So consensus 0.4% on preliminary Q3 corporate profits, 4.1. That's a huge jump, right? So like, yes, they're thinking, okay, well, this growth can outpace, we'll have profits. So like they basically saying, hey, we're going to make more money. PCE was the next one, and that is really the Fed's favorite gauge. So that's personal consumption expenditures. We want to see stuff like this, where we actually might see negative numbers. I think we saw negative numbers in CPI a couple weeks ago. This month over month, it's not a huge thing. It is noteworthy, but the month over month headline, we got this without where it doesn't say core. Core does not include like food and gas. This headline where it doesn't say core, that does include all that. That came in flat. So 0%. So meaning that we as in consumers are not spending more month over month than we were the prior month, which is good. And then, but the year over year number came in right at expectation. So that was pretty much as expected. This is just like one really cool little point that, okay, if this consumption doesn't continue to like go, crazy high faster than, let's say profits and things like that, then we should hopefully be okay. But here's what the market's pricing in right now. So this is the FedWatch tool. I just go CBOE FedWatch. This is June of 2024. This is the first month that they're really starting to price in some actual rate cuts. So this is 25 basis point cut, I believe. This is about 40% probability. So right now, this is the month to watch. June and July, they're both pricing in about a 40% probability of rate cuts. That's about halfway through next year. Powell's not confirming that. The market's already pricing it in. So just as an aside, just know where is the market right now. We're pricing in rate cuts right now, starting halfway through next year. So if that changes, if that storyline changes, then we'll start to see some market shifting. So until then, I wouldn't expect to see much. Yes. IWM. Yeah, we talked about this last week. We've been talking about this for a long time. And I just mentioned it slightly in passing, but when I said some markets are priced for a hard landing still, that is that small cap index, right? And so the biggest catch-up trade for the rest of the year isn't going to be SPY. It's clearly not the Qs. It's in those small cap names. So you got to want to try to shift your focus. And we've been seeing a lot of rotation in the market lately. We could talk about that as well if you want, if we have time. But so moving forward this week, we have factory orders and some small 3 and 6 month bill auctions. I think those are done already. It's really nothing burger in terms of data points. Tomorrow, JOLTS and ISM services, again, pretty much in the clear until we get to later on in the week. We do have Wednesday at ADP. ADP is a private company that does basically their own non-farm payrolls report. It is notoriously different than the government's NFP numbers. So just as an aside, sometimes it does actually move markets, but it doesn't always hold, if that makes sense. So be aware that that's possibly something that could change. We were looking at this OPEC Plus meeting last week to be potential catalyst for the oil sector, but that did not move prices really positively, like at all. They did announce that they are going to do some production cuts, but just market really didn't seem to care. So we'll have to just play with the price action, watch the price action from here to then. But it does look like that sector is stabilizing right now. And again, also towards the lows. So Thursday we get jobless claims. We also get consumer credit. So like how much consumers have on the books in terms of their credit balances. Kind of an interesting one. So remember, we're thinking, what's going on with consumer spending, things like that. And then again, yes, Friday is the big day. That one is the non-farm payrolls number. This day, Friday, will mark the basically the trend for the rest of December. But again, I will walk through that, how that works just slightly. So earnings review, preview, nothing on deck this week for the Dow 30 components. We've had 29 of the Dow 30 components report so far. Only 3 have missed. The one that met was Walmart. Obviously, it didn't go up, but that's what happens when you just kind of meet expectations. Market was pricing in a beat and raise. They didn't deliver. Everybody else, aside from Chevron, Travelers, and Boeing, was they did miss, but I think all of those also, like, those expectations were I mean, I don't know how much worse they can get. Obviously, Boeing did rip off of some other headlines as well. So here's the rest of I have earnings. So this is Earnings Whisperer. Just this is the basic calendar for the week. Do we have anything? Let's see. Buybacks. Oh, buybacks begin this week. Blackout periods for insiders as well. I don't know what sector that is. Like mutual funds. This isn't, yeah, mutual fund rebalancing dividends. Yeah, so that's definitely a thing too. So when we talk about like large funds and things like that, rebalancing, you've been paying into Social Security, all that kind of stuff. That money has to get deployed. And so like this is all part of what we've been seeing so far. So anyways, just as an aside, I will earnings season opening back up. Yeah. So post earnings is what he's saying. Then people can start talking about their companies and buying back stock. Now that blackout period is starting to go away. So do we have anything on deck that's really interesting? MongoDB could be interesting. I'm just saying Toll Brothers. This is one of those housing plays. I think she's probably gonna run. I don't know if anybody watches Smucker SJM. That thing's been on a tear. I'd say all these is probably upside. A lot of this looks upside to me, to be honest. Probably not. I don't know. Stitch Fix is like, I don't really want to talk about that one. RH is going to be interesting. So it looks like some of these home builders, Toll Brothers, RH is retail in that sector. A little bit left of the tech stuff, not much. Is Broadcom. Smartsheet is a very small company. Guidewire, also a small company. Vail Resorts, this might get interesting here. Other than that, I'm really not seeing a whole lot. I don't trade Chinese companies. You won't catch me in any of that stuff. AutoZone would be, again, very interesting. Someone's talking about Campbell, long Campbell. Campbell's chunky. I mean, yeah, maybe we'll see. Probably, but I don't know how much. It's not really a big mover typically. I don't see any reason why you couldn't buy the stock though. Let's see. CPB. Where is it? Oh, it's pretty low. Yeah. Sub 40. Yeah, you should have a nice little, probably $10 gain, something like that. Yeah, that's a good spot. Is Campbell's worth $40? He's probably worth more. But anyways, yeah, I think most of the earnings stuff is done and gone, right? So it's not a ton left to really trade around. Dollar Gen could be similar. Dollar Tree did already reported. Ollie's, if you don't know, is also one of those discount retailers. They specialize in old people stuff. OLLI. They used to be a really good stock. And then their CEO died. And the stock sold off like 50%. Yep. And has basically been on a grind ever since. It's back almost 80. Oh, yeah. But that one's reclaimed quite a bit already. Chewy is completely toasted. I don't know. It's like $19 right now. I sniped a little bit of this, a few dollars lower. I have no idea, but that could be one where like I think the market sold this guy off when Ryan Cohen went over to GameStop. To be fair, I don't know. I can't get into the valuations on Chewy. It just looks cheap now compared to $70-$80 or whatever it was used to trade at. It's actually still below its IPO price. IPO price was 32. I don't know. Do you guys still buy Chewy? Buy stuff from Chewy? Who knows? That I don't know. I couldn't even begin. But I did want to go over some of the stuff. So we talked about like Santa Claus rally. This is election year cycles. So if you've been following the channel for a while, we actually were like pounding the table, screaming it right here. This is this year. This is last year, October, November. Pound the table, right? This is the time to buy, get long. This is a 4-year presidential cycle pattern. Like this is from Bloomberg. But, where we are right now, we're actually right here. So this is still a pretty bullish time of year. This kind of goes back to like, okay, if your president's going to get trying to run for reelection, and I know, whatever. Typically, they don't want the market to be down, right? And they're definitely not getting reelected if there's a recession. So they tend to do a lot, or like whatever they can do to continue this rally going. It's not as big of a return as the year that we're coming out of, but it is a good return. So this is what we're looking forward to next year. And in terms of the presidential cycle, this is like a 50. Well, it's like a 90 plus year. I think we have about 100 years of data on this. So take it for what you will. I think it's pretty reliable. But that is where we are. Let me see. Do we have the rest of this? Talked about, this is just, again, that last Santa Claus stuff. When I put the title together in November to remember, it was in thinking about this. So the Santa Claus rally, it's normally like, look at this, 3%, maybe. Looks like I just got stopped out of sudden. Yeah, like 3% between November and December. Do you guys realize we rallied like 9% in November? Like that's a huge, huge rally. So it is tough to press a lot of these bets here, especially on that quote unquote Mag 7. I will just say I'm not shorting any of those stocks. I'm not interested in shorting any of them. I would say like maybe if we get some like dip buys, which we might have had this morning, those might be good spots to jump in. But yeah, we've run a lot, right? We ran 9% something so far in November, and that's a huge month. That's that's a huge month. That is not normal. So just an aside, I'm basically into this point of like we want to be very selective where we start trading from here, right? And that's kind of my point. There are still values to be had. We will go through a couple. There's still some like really interesting spots in the growth market. And I mean really interesting spots in the growth market. So without further ado, I do have one more section that we do want to go over. And this is just our friend, Miss Cleo. So let's see if we have that ready. Here we go. All right. Props to the graphics team for creating the transition. But this is the time of show where basically we have our friend Miss Cleo give a quick read tarot card. Actually, I didn't update this week, but here is the reading for the week. So every week, and I love doing this, it just cracks me up. But sometimes, you guys, it blows my mind how spot on this can be. So take it for what it is. This is the reading this week. So we got one theme card for the week, and then we have Monday, Tuesday, Wednesday, Thursday, Friday. Every day gets their own individual card for that day. So I'm going to start with basically the weekly theme. So major arcana theme card. This is the Chariot, one on very top. So brings a lot of dominant energy to the market this week. This card is especially strong as it implies one directional movement, quick, fast, and in a hurry. Using the Chariot, we can travel great distances in a short amount of time. She does say historically the card's negative, but only because we don't have a ton dual spirits on point, but only because we don't have a ton of data on them. So remember, this is not an active trader. Well, anyways, let's get back to this. Where was I? So recap, it's going to be a wild week. Okay, if you're gonna get anything, she says that she's really good at predicting the trends and the setups, basically the setups. And if you're gonna take anything from that, I would take away maybe I can remember the setups, right? So wild week, Monday trend day. I think we'll see, right? Into a Tuesday trap, interesting. Wednesday, Thursday, lots of action. Friday, breaks someone's heart. Don't know what to take from that. So Monday, trend day. Tuesday, trap day. Wednesday, Thursday, lots of action. I think this means chop. Friday, it's going to break your heart. So let's get into it. So Monday, here we go. So Monday, get back in here. Hello, where did my thing go? Damn it. So Monday, I'm trying to zoom in here. King of Swords, right in the chariot to start the week means we're bringing some major moves. We'll be breaking support, lots of resistance. I actually do have a lot of setups around this. Most of the day rushing hard into the same direction. Yes, trend day. Mostly bullish for stocks. So this means bull trend continues, given the theme cards very possible. Okay, so tomorrow, and this is probably where it's more important, there was a trap. Same suit as yesterday, which is perfect and means we're going backwards from where the king left us. A rally will have been a bull trap. We'll see. And a sell event will be a bear trap. Actually, I think we sold off a little bit this morning, right? And then we're starting to rally back. Yeah, that's exactly what's happening right now. Play mean reversion here, start today, and look for some bullying from the perpetrator to deepen the wound. Okay. Wednesday, the magician. So some notes. He trends negatively for stocks, and I wouldn't be surprised to see if we go lower here. His power will be magnified by the theme card. Use his move to set up a trade. So he does a crypto reading also. So these cards are all over the place. Faced a trial of strength and battled our way to success. Now the magician arrives to bring us the gift of magic. Careful, though, that you don't sell your soul. No gift is truly free. This, too, is a trend card, but usually there's a trap set first. Perhaps Wednesday is our trap. We'll see. Magician can manifest anything he desires, so don't fade him. Just allow his energy and keep your stops tight. We'll see. These things crack me up. So Thursday, trick or treat. The Queen of Wands is back to bring the fire and perhaps a little magic too. Her moves are like the rest of the suit, impulsive and difficult to trade. There will be directional momentum, but the swings will be so severe it might be. This seems like, like how we used to have like grind, rug type of price action where it's like grindy one way, either upside or downside, and then poof, impulse back, mean reversion, but we end up trending in one direction. Look for an early higher, blah, blah, blah. So Friday, we close the week with some mediocre energy and a card that brings us feelings of apathy and discontentment. Someone didn't get what they want or wants that which is out of our reach. So maybe we don't quite get to our target. This card likes to appear after a long week of bear action and kill the puts. Does the same thing happen here? We don't know. I think it's a small play, mean reversion from Thursday or weekly trend. It could also just be lots of chop that kills both calls and puts. I don't see a lot of negativity, so a small bounce wouldn't surprise me. It could come at the very end of a session, is often the case with Fridays. Well, what I would say is mediocre energy. This is maybe, if you're playing for a big move on NFP Friday, maybe don't. Right. That's what I get from Miss Cleo this week. But anyways, I think that's enough for now. Let's go ahead and jump into the charts really quick. So every day, God, these screens. Okay, sorry. I come into the market, and this is my main view. So SPY, Qs, those are my majors. Diamonds up here, IWM. Clearly, so if we want to see a good trend, we want to see all these top charts trending in the same direction. It's just crystal clear right now. We don't have that, right? So SPY is kind of trending down. Q is trending down the most, like by far the weakest. Diamonds have been incredibly strong. This is industrials, right? And IWM remains the biggest catch-up trade. But yeah, this is not all the sectors are not going the same direction. So we don't have clean trends in general for the market. Other things to note. So Dixie Dollar Index, this is this guy right here. We want to pay attention to this, right? We are in a pretty clean downtrend, but we're bouncing a little bit right now. So can it bounce a little bit more? Yeah, it probably can. That's not very good for some of the growth stocks. So specifically like the Qs and maybe some of the some IGV type names, but or highly levered names, if you will. That's what's tough for. I'm sorry, that is interest rates. So this is the TNX. If the rates are going higher, then that's really tough on very highly levered names, and those are typically in the like smaller cap sector. So watch this, right? So this is the 10-year yield. This has been in a pretty heavy downtrend, starting to bounce. Hopefully, we lock in a lower high one more time because we do have nothing but a series of lower lows and lower highs so far. Right now, no change of structure on that at all. I did have a gold trade on, and I stopped out this morning. We did break through. This is basically all-time highs on gold, like futures. So that said, let's move this. I still think this is solid here, but this is kind of where we end up basing, right? This is a weekly chart. So again, it's something that I want to own. I want to have. I want to trade around. I think we can have some pretty good trades. But this weekly candle, that was huge, right? I think that after a move like that, it's typical to go into some kind of retracement mode. And that's exactly kind of where we are. We're about, looks like we're retracing most of that right now, but we're still kind of towards the top end. Just under 2K for gold seems to be support right now. So honestly, that's a weekly chart. You could go to the monthly chart. This can build a base for a very long time. It was a pretty big candle last week and a lot of headlines on that one. So does this go in a holding pattern? I think so. Right. Am I going to short this guy? No, I'm not. But I don't want to have anything on just yet or at the moment right now, because one thing that's true about trading gold in terms of options is that if it's going up, volatility is constantly increasing. But the second you get a candle like this and it tends to go into a stalling, like sideways type price action, that volatility, that premium value is going to disappear real fast. So I don't want to have anything to do with that right now. So that's me. This is crude. So I actually got a signal on crude. It's been nothing but lower highs and lower lows right now. This is not quite a lower low. So we'll see. This has been a tough one to trade. The catalyst that I was looking for did not pan out. So, we're just going to have to wait, right? Just have to wait and see. I think, this is a good spot in terms of the underlying crude asset. But I'm more interested at this point about some of the equities around those spaces. So anyways, Qs, let's get you a couple levels. Actually, let's do this real quick. So SPY, couple levels. I'm going to go to 30-minute candlestick chart. So orange box is the length of an average week's range. Again, it's kind of like holiday volume. So I don't expect us to have a huge move. But that said, we've gone sideways and we've been sitting at this 455 level for 2 weeks. Maybe, if you consider after this CPI print, 20 days. So at this point, what I would say is that the market is technically ready for a move. We've had essentially 2 weeks of very sideways action. It's ready for a move. Do we get it? I don't know. That's maybe what Miss Cleo is talking about. It should be a Friday move. I don't see a whole lot of data otherwise. But if we were just to take a 2 week or like an average week's range to the downside, that actually brings us all the way down to the bottom of this fair value, like this current range to the downside. Let's just go. This would be our break of structure here, 448.07. That would be the downside and I'm taking this pre-market upside. Right now, this kind of volume shelf, this right here, this is about 454. This has been holding us pretty much the whole week, right? That's coming right off this. So this is our major kind of point of contention. And that's where, like this morning, I saw it breaking. I was like, do I take a small short? I took a little starter, quickly stopped out and actually reversed. But here we are. We do have a gap day today, by the way. So gap rules, right? Where this is 50% of that kind of session down. We can mark if you like. There's a session gap all the way up here that may fill 459.75, right? May fill. Maybe that's where we close. But without the huge catalyst, I'm hard pressed to see a big move. But I will say, if it comes, look, it's going to come big time. It's going to come under 448, but below 454. We can have a pretty large move that would look something like this. Something like this. Down to this second kind of like volume shelf. So we would trade peak to peak. 454, I think, would be your kind of like wall, and then take profit 453, and then ultimate target 450 to the downside there. That's what that trade would look like for me. Maybe like a session half, but that's not happening today. If we do continue on to the upside and this 455 level holds us, a full week's range to the upside would be 465 on that one. Qs, here's what I'm talking about. So Qs, look, this is, again, a big consolidation so far. This is massive consolidation. Qs are not doing what SPY is. So Qs are rejecting at that consolidation low. And again, if I take an average week's range, this one can take us all the way down to me, 378, if we reject Friday, Thursday's lows and can't reclaim that this week. I don't see this going higher until we can do that. And so I would take, again, this pre-market high down here, 374. Technically, I guess you could get all the way down to 371, but that would be a very tough one. This right here, this area is defending so far. We'll see, right? I could take this all the way down to here, 384. So sub 384, this gets pretty rough. Pretty rough. Right now, I'm just looking at a lower high after a lower low. So not really ready to go in there. If you want to take short, yeah, not bad. And this is that CPI gap, fair value gap here. I don't think that we go past 378 to the downside if we do that. But that one looks like if this goes, SPY might follow with it. Aside from that, here's the industrials. Totally different chart, right? Like completely different, not even kind of the same. If we do get like a breakdown here, it's going to come, man, honestly, I think this one goes sideways. It's just had such a huge run. This one needs time to rest, definitely. So let's say rest would probably be down to 357 on diamonds, DIA, probably retest this longer. This is a reclaimed uptrend here on the diamonds and just rest right here, probably somewhere around 355 to sit on these highs. I don't see it breaking this guy. Upside though, yeah, interesting. But my main squeeze this week, this is IWM. This is the guy I've been looking at. This is the one I've been really kind of like focused on. This is that small cap sector. If I take a look at this, if I just pull this back on a weekly, right? Like this is, and I take all these drawings off. I mean, we just came back and we retested this 172 level from 2018. I mean, it's a huge check back, right? Motion. Yeah. Snow is one. We will walk through snow today for sure. But this guy here, honestly, I have up to like 193 right into this little kind of like gap. We call it fair value gap. Let me just pull this in really quick. We have to reclaim, and this is how these NFP levels work. So it's a good spot on this guy just to kind of walk you through how they are. So when we get an NFP day, which we will on Friday, they look like this. And I mark the low and the high of the day. Low meaning once the market gets the data, I mark the low after the market receives the data. Sometimes that's pre-market, sometimes not. And then I mark the high of that day. And then after that, so that day is aside, right? We don't trade that. I don't trade that day any different than any regular day. But it's after that, once the market gets like 2 days closing above or below one of these ranges, one of those highs or lows of Friday, this coming Friday, that's the trend. That's the trend for the entire month of December. And that actually stays intact right now. And I can say, look, right now, this is July NFP highs. So right now, the market's basically repricing back to where we were in July for the mid cap, for the small cap sector. That said, if we take the lows, this could actually take us all the way up to back into that 195 on an average week's range. So that's what I'm saying. Like, there is plenty of room here. And 195, you guys, that's going to basically take me right back to where I was looking for, right into this section here. It's not even that big, but I mean, to me, that's like, okay, we should probably go there regardless, because this is that sector that was really priced for a hard landing. But yeah, this remains. I know it's had a couple big days, but look at this 2-week consolidation. 1, 2, maybe we get another big day this week, and then we can let it rest for a bit. But yeah, I still like this. I still like this for upside. I wouldn't be exiting stage left unless we're below this 182.50 on equity. There's different options are totally different. So, but on equity, this 182.50 level for me is kind of like what I'd want to see if we do get a pullback and retest somewhere in here. These are that prior tops. It's also going to line up probably really close to a 200-day moving average. Yep. This is the 200-day moving average right now. And what we're running into as we speak is the 200-week moving average. So this is, of all the sectors, like this guy has not reclaimed. It's just barely reclaiming its 200-day, just barely reclaiming its 200-week. Everybody else has already done that. And again, in terms of gold, we got to, the dollar has to chill. Rates have to chill. If rates are going up and the dollar's going up, that's not going to be bearish. That's not going to be bullish for gold. Crude's just going to do its own thing right now. Who knows? Who knows? But we want to check out some stocks today. And I told you guys I have a couple. So let's go ahead and pull some up. So Motion, what's up, man? So NEM. Let's go over Snow first. Okay, we'll do NEM. So NEM is the largest gold miner, largest component of GDX. GDX is the gold mining sector. And this sector is in consolidation right now. It had a big move the last week or so. I think, to me, so those guys all trade off the price of gold. If gold is going down, these guys will be going down. Crude oil staying low is actually good for the miners. But this 1, 2, 3, 4 days, I would give this a little time to consolidate for sure. I don't think it's going to go down necessarily, but this guy's really got to get over 42.30. But yeah, it's pretty pretty low right now. We are retesting some of this like major structure from before. I don't see this breaking down at all. But it's going to be a bit hard. We'd have to get a weekly close over 42 to really get moving. But when something like this does get legs, you're going to notice it, right? I'll just take this really quick, shorter term. And so typically what we see, this is a weekly chart, we see this first breakout, a little bit of consolidation, a little bit of pullback, and then we go, right? So this is going to be about just under 40 for that pullback spot. Let me see if it's a little bit better on the daily. I'll sync this in the layout. Yeah, it's basically going to be about 38.50, something like that. Anywhere in here. This guy. I mean, it's a good dividend payer. It's decent. If I was a super gold bug and really bullish on gold overall, I would be like pounding the table. At one point I was. This one, just because of where we are in the market, I don't know. The gold trade right now is just about real rates. And so as long as inflation is over the 2-year yield, essentially, gold is going to be going. But if it's not, which is what's going on, if the dollar's going up and the yield's going back up, gold's going to struggle. But yeah, I think you can apply that on pullbacks for sure. So Snowflake, this is the big one, right? And this is honestly Snowflake. I'm just going to tell you guys right now, it's probably like my number one pick of stocks for all of next year, if you will. but it's a huge, huge level. So Snowflake, if you don't know, it's probably the best of breed, in my opinion, coming from enterprise tech in Silicon Valley. It's like the best of breed growth enterprise IT company that you have out there in the market right now. I mean, super important. If there's one thing, that is always growing. What's up, Brando? If there's one thing, like when I was growing up, this is a little story tangent. Sorry. My dad always said, hey, look, invest in real estate because God only made so much dirt, right? There's only so much land to go around. And that means that real estate is going to be a scarce asset. The thing about data and coming from Silicon Valley is like, it's different. Data never goes away and it's always growing. So it is important to have some kind of investments that like will touch that basic sector, if you will. And so like it's the opposite of something that's, there's only so much land. Like data is always growing and you always need a place to warehouse it and sort through it and pull information out of it. That's what Snowflake does. And nobody deletes it, right? Like how many emails do you guys have? Right? Like it just keeps growing and growing and growing. But data is just one of those things that like it's for the rest of our lifetimes and our children's lifetime. It's just never going away. And it's not going to do anything except get bigger. So it is important to understand like some of those basic things. Today's open and close, this weekly close finally got us over a super key level. And this is that last low for Snowflake, right? This is 184.71. We broke down. Here's the level, axis resistance. This is the first time we're getting a weekly open. And again, if we close this week over 184.71, we are off to the races. And I mean, we're off to the races in a big way. This consolidation, let's say from here to here, 630 days. That is a 2-year consolidation. And if you're not familiar with the saying, the longer the base, the higher in space. Yeah, this is not a small, like this would be a big time breakup. This first impulse could take us over 200, like real quick, if you will. So this is, again, I would say right here, this is going to be your first, that's 208.50. Probably your first main target. and I know it's 190 right now. That Snowflake can do that in a day. Like it really can. Here's the thing. So we had an earnings gap up here. And when we're looking at triggers, things like that for trading, we always say a 2 to 3 candlestick setup, right? So what do we have? 1, 2, 3 candlesticks setting up today, right? After a big earnings move. And if you're in our group, there are two triggers here. One is 2 candles closing above a certain level, and the other is a clean candle open and close above, right? So we have 2 candles closing above this key level 184.71 after earnings, right? Today's candle is pretty much like it's right there. Oop. Hang on. It's right there. I'm going to have to get that too in a second. But this is my biggest watch for sure right now. That's the daily candle. This is a 1 hour. This is a big kind of breakout. As long as we're over 184.71, I'm a buyer of Snowflake. I'm a buyer for the rest of the year on Snowflake, and then probably holding all the way through next year. So that is one I'm very, very, very excited about. That is a huge, huge possible mover. This guy likes to get up and go. Big power earnings gap, clean trigger here. Here's the nitty gritty, if you will. Anything over, and these are like pre-market levels. If we're over 192.85, we are just gone. We're probably breaking 200. Let it go a little bit, and then it'll consolidate. But this is the first major trigger. So again, 1 day open and close above, 2 day open and close at, 3rd day open at, closing above in a strong way. This is very reminiscent of Of Target, right? Target, we had to wait. It tagged that 200-day simple moving average on Target. So she's probably going to pull back a little bit as long as we hold over 130, call it 350. It's okay. But I'm pretty much done with this short-term trade on TARS J right now. But yeah, that's the biggest one on my radar right now. I gotta call the wifey back. I know I'm gonna cut this one a little bit short. Do we have any other questions? I think somebody asked about solar. I'm not a solar guy. I'm just not. If you were to take a shot, maybe Enphase. These are trading stocks. I'm not an expert here. I'm not an expert there, so I can't really talk like with a whole lot of substance on these guys. But I will say Solar Edge was one that was taken out of the S&P 500 SEDG. Yeah. And seems pretty much unfazed, but yeah, that's usually when they're taken out, it's already as bad as it's going to get. These are stocks that are absolutely they've had a major sell off. This TAN is the ETF that tracks them. One market, and I'll just ping you on this, is if you missed the Boeing move, the Boeing rally, airlines are your beta trade or your second tier type of trade. Caught this on Friday, a little extension today. Let this one rest. Like, this is American. This is way towards the lows. These guys, again, sectors that are priced for hard landings, travel, leisure, right? CCL, higher low, higher. Ooh, that looks really good. It's not really, that's more like equity play for me. I am in Delta. I think, I'm trimming here. I'm looking for a roll up and out. United, and we got, who was it? Alaska today. I think it was, they announced they're purchasing Hawaiian Airlines, right? So HA is Hawaiian Airlines, is like 180% move. You're going to probably see some of this stuff. What's the other one? Small one, JetBlue. So all of this, these are way low. If you want to just take a swag, big swath at it, JETS is the ETF that tracks the entire sector. That's an easy one. Okay, so if you see these tickers, going off, that is cause for concern, by the way, you guys. If GME, AMC, Clover, Sundial are all flying, that is usually the beginning of the end. So we want to be cautious of that. You can trade them; they're fine to trade, but I'm just going to tell you right now, it's usually the beginning of the end for the rest of the market. So that aside, be cautious. I don't think the VIX is going to tell you anything, by the way, right now. I think the VIX is just overstated. We'll see. I wouldn't trade this. I'm not trading this. It is what it is. But again, to me, IWM is the best one. Snowflake, look, this is a possibly a very large trade coming. I'm not going to say irresponsibly long, but I would say it's time to really start nibbling at this guy from an equity perspective, not something small. Live on Edge is asking about UPS. Yeah, UPS is an active trade, which is probably why you're asking. I am not going anywhere on UPS. So this is, again, one that was kind of priced for that hard landing, right? Today, here's the breakdown level, 155. Today's an important day on UPS. It is kind of like this safety trim type of day. We're actually squeezing on the daily. This is like MACD histogram, squeezing on the daily back over that bottom end of the prior trading range. So we're reclaiming it. What I'm looking at here is essentially some liquidity grab, sub 155. I mean, they took this guy way down there, and we've been kind of taking it up since, right? I think we really loaded. I finally sent it once it was reclaiming this level, 150. I don't remember where I took it. Probably over here, 147. 1, 2, 3. I don't think I've had it for 2 weeks. Maybe I have. Who knows? But this is where, to me, this trade's actually just now starting to get really interesting. So we've had what's very clear, nothing but a series of lower highs and lower lows on UPS. But since then, I'm watching my phone. Since then, we've started to break structure. So lower high, higher low, right? Higher high, higher low. Now I'm looking for the real change of character is what this is going to be. That's going to be way up here over 160. So I'm in 160 January calls. To me, if price can accept, meaning that we close the week over 155, or we have that same kind of retrigger, 2 days in a row closing over 154.70. I'm liking this for the next leg higher. I'm going to keep what I have right now, but I'm going to start adding some higher strikes. So looking at like 165s, maybe in 170s to start rolling that position up. Because if we get over 158.50, we've got some very large pockets to fill, low volume pockets, which we like to trade around. I love to find these kind of low volume pockets to possibly get boom and break right through. So that's the next trade up over here. That's going to be like 165s. It's a little early to go there, but to each their own. We'll see. I think we have to be weary that FedEx has earnings coming, but that's not till December 19th. So FedEx, obviously, guys, much better looking chart. This one has already reclaimed. So I'm looking for UPS to do something very similar to this, where UPS had FedEx kind of big flush down, liquidity grab, and grinds its way up, and price accepts back over 200. Now we're back over the next level. That's what I'm looking for on UPS. Cool. All right, guys. I am going to call it right there. I'm just going to check, make sure I didn't miss anything. But yeah, Snowflake, this is my favorite setup for the week. I think this one, that could get some serious legs underneath it. We'll see. 192, 193, that's going to be your takeoff, takeoff level. That's going to come from all of this over here. In the meantime, it could be a false breakout. This is 195. So just be aware. We do have a little bit of overhead supply to get through this stuff. But yeah, she can get squeezy for sure. But anyways, that's where I'm at. And I will call it from there. I think we're good. Oh, and by the way, so if you're following me this week, tomorrow, guys, I'm going to take this down. So tomorrow is a big day. Paper Junior is scheduled to be here. So this is the end of an era for me. Probably the last day I'm not a dad. Whoa, that's so scary to say. So scary to say. But tomorrow is the day that we are scheduled to go in. So wish me luck. In terms of my trades, I'm going to be looking less day trades and just trying to do some stuff that's more swing stuff like this, maybe a little bit further out, so it's easier for me to manage. If you're in the server, look, we got a ton of day traders. I will be in as much as I can. I just don't know what it's going to be like because I don't know, right? I'm not a dad, but anyways, yes, huge thank you guys. You all rock. It's a big one for me. Life changes, end of an era. Yeah, we are in. Appreciate you guys and all your support. I love it. I love to see it. You all rock. But I will see you out there. I'll be on some spaces tonight. And again, I will be around. So feel free, DM, ping me, whatever. But I got to call Mama Gaines back right now. Love ya. See you later.